All right, let's dive in. Ever looked at a company's annual report and just seen a wall of numbers? It can feel pretty intimidating, right? Well, today, we're going to crack the code on what are called financial statements. We're going to learn how to read the story that those numbers are telling. And it's a skill that, I promise you, will completely change how you see the world of business.
See, the very first thing you've got to get is that financial statements aren't just dry, boring spreadsheets. Not at all. They're a narrative. They're telling you the story of a company's journey. Its big wins, its tough struggles, where it's trying to go. Our job today is to figure out how to read that story.
So to get started, let's use a really simple analogy that I think we can all relate to, a school report card.
Think back to your school report card, right? It was a summary of how you performed over the whole year. Well, a company's financial statements do pretty much the same thing. They're like a business report card. And they don't just show you how things went in the past. They give you this crystal clear snapshot of the company's health right now, and even hints about where it's headed.
Okay, so what are they officially? Well, they're basically these structured documents that record everything an organization is doing with its money. But here's the really powerful part. They act as a universal language. Because they all follow similar rules around the world, you could pick one up in Tokyo or Toronto and get a real sense of that business's health.
But why go to all this trouble? Who is this whole story even for? Well, these documents exist for one huge reason: to help people make really important decisions.
And you've got a lot of different people reading. You've got investors asking, hey, should I put my money into this? Lenders need to know, are they going to be able to pay us back? The management team themselves uses them to ask, are we actually hitting our goals? And even employees are looking at them wondering, is my job secure here? Every single person is looking for answers.
And that gets to the most crucial point. These statements are so much more than just a legal requirement. They are the absolute foundation of transparency. They're the bridge of trust that connects a company to, well, the rest of the world.
So, to build this entire story, financial statements stand on 4 key pillars. Each one tells a different, but totally connected part of the company's narrative.
These are the balance sheet, the profit and loss statement, the cash flow statement, and the notes to accounts. So let's break down what each one tells us, starting with that first pillar.
First up is the balance sheet. A lot of people call this a financial selfie, and honestly, that's a perfect way to think about it. It's a snapshot of a company's financial position at one single moment in time. It answers 3 super simple questions. What does the company own? Those are its assets. What does it owe? Those are its liabilities. And what's actually left for the owners after all the bills are paid? That's the equity.
Okay, so if the balance sheet is just a snapshot, a single picture, then our second pillar, the profit and loss statement, or P&L, that's the storyline. It doesn't show you one moment. It tells you what happened over a whole period of time, like a quarter or an entire year.
There's this famous saying in business, and it is so true. Revenue is vanity, profit is sanity. It's really easy for a company to brag about how much money it's bringing in the door. That's revenue. But the P&L, it cuts right through that noise. It shows you how much the company had to spend to earn that revenue and tells you if, at the end of the day, it actually made a profit. That's the sanity part.
And that brings us to the most critical part of the whole saying. But cash is reality. And this is so important. A company can look profitable on paper, but still go completely bankrupt if it runs out of actual cash. And this is where our third pillar is just absolutely vital.
The cash flow statement is the business's lifeline. It tracks the real hard cash moving in and out of the company. It's usually broken down into 3 key areas: cash from your day-to-day business, your operations, cash you use for big purchases, your investments, and cash from things like loans, which is financing. This statement shows you if the company truly has enough fuel in the tank to keep the engine running.
So finally, the numbers alone can't tell the whole story. And that's why we have the 4th pillar, the notes to accounts. The best way to think of this is like the director's commentary on a movie. It's where the company explains how it came up with the numbers, maybe gives details on lawsuits, or provides all this other crucial context that really gives the figures their true meaning.
So, we've got our 4 pillars. How do they all fit together to create the complete picture? Well, let's use one final analogy. Let's think of the business as a full-length movie.
Here's how it all comes together. The balance sheet, that's your cast and your props. It shows you who and what you have to work with at the start of the scene. The P&L statement, that's the action, the events. It's the plot of the movie, what actually happens. The cash flow statement, now that's all the behind-the-scenes logistics. It's making sure the production has enough money to keep the cameras rolling. And the notes to accounts, that's the director explaining all the subtle details you might have missed.
When you learn to see how these 4 pillars work together, you realize you're not just looking at numbers anymore. You're reading the strategies, the big decisions, and maybe even the weaknesses. You are, in essence, reading the very heartbeat of a company.
So you now have the tools to understand this language of business. The only question left is, what story are you going to uncover first?